Morning all. How are you all doing? Happy Monday. Happy April. Finally, the quarter is over. The quarter from hell, January to March. Not a good quarter. Anyway, that's done. We're in April. And we missed April Fool's Day yesterday, so I couldn't do anything funny. Never mind. Morning, FTNet. Amy, Edward, Mark, Cyril, Evil, Peter, Virginia. It's time. Ryan, Monkey, how are you doing? So, it's Tuesday. We had some weird movement yesterday. Lots of movement yesterday, actually. Very weird day yesterday. Especially with the US dollar. Big rally on the US dollar. So, not quite sure what's gone on there, but we'll have a look at it this morning. We'll go through all the pairs today. Have a look at what what everything's been doing over the last 4 days. Good April. Morning, Senji. Morning, Dallas. So, yeah, we're just going to whiz through all the pairs this morning. Have a look at everything, see what's going on. Obviously, looking at the US dollar yen, which is completely stuck again. So we're totally sideways on US dollar yen. This morning, we'll quickly cover the news, basically, to start off with. This morning's main news. Let me just get rid of that chart. Find my pen. I've had a quick scan through the news over the weekend. I'll quickly whiz back in a sec as well and have another look at it again, but nothing particularly exciting there. Again, this morning we've had the Japanese coming out, or Suzuki basically saying we're not going to comment on FX intervention, not commenting on specific means of how the monetary policy is going to affect FX, blah, 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 blah. Various factors behind FX movements, not just monetary policy. We're carefully watching the daily market moves, basically. So they're still indirectly threatening intervention. They are still keeping a very close eye on the Forex market, and specifically, obviously, US dollar yen. So as you can see, we pushed up to the 152 level, the previous intervention level. We've not surpassed it. They threatened intervention at this level. Market stalled. So again, we're right up at the highs. If we do come up here today, I suspect we'll pop back down again, but they haven't intervened. The market also hasn't pushed. So nothing happening there, but the Japanese are still watching it. So at any moment, they could basically intervene. If you scroll through the Kishida warns North Korean missile launch impact. North Koreans launched another missile, have they? All right, okay. So if you scroll through the news, going back to kind of Friday, really, Thursday, Friday last week, nothing particularly exciting in here. June rate cut, same stuff, 50-50 chance. We had the PMIs came out at 50.3, so that was positive US dollar. But that move got undone. So yeah, nothing really of interest at all over the last 4 days, apart from the Japanese continuously saying we do not want you to push the US dollar yen, which the market obviously has not been doing. So yeah, pretty much business as usual. So this week we have obviously yesterday was bank holiday. We had the PMIs come out yesterday, which gave the US dollar a bit of a positive push. So if we look at the US dollar Swiss, we had a bit of a rally there. It's continuing to push again this morning. We had a little bit of a push there. Euro US dollar down. So basically, the market seems to have liked the US dollar news yesterday. As you can see, quite a bit of slippage in this as well. So you can't really read this move as necessarily what the US dollar move is. There was no liquidity yesterday because most of the markets were shut. So the banks were all shut. So this is probably a slippage move, in which case I suspect we might well undo the whole thing today, but we'll see what happens. So yeah, so that was news yesterday. Today, we haven't really got anything. We had the monetary policy meeting minutes for the Australian dollar. Nothing much happened off the back of that. You can see there's no real movement on the Aussie, pushing up a little bit there, but no real movement on the Aussie. We've got the German CPI figures coming out today. So Germany releases their inflation figures state by state, the 7 states. 7? Is it 7? 6 or 7? I can never remember. 6 German states. So they released their CPI figures state by state, which is why it's an all-day event. So we will get each individual state, like Bavaria will just suddenly release their figure, then you'll get another one come out, then another one come out, and it just builds up an overall picture over time of what is happening with the inflation figure. So we don't tend to get a huge spike off of it. We tend to get more of a gradual build-up of speed and movement on the euro. If the figure comes out and looks like it's coming out as going to be a deviation on forecast, which is 0.5. So we'll have to wait and see what happens with that, but that's going to be a slow drip, which will be throughout the morning. This afternoon, we've got jolts. Market doesn't tend to do an awful lot of that either. So that's the only news we've got today. Going into tomorrow, we've got the CPI estimates, which are the kind of revised forecasts for CPI for the Eurozone, which doesn't really tend to do an awful lot either. We've got OPEC meetings tomorrow, which will affect the Canadian dollar and oil. And then tomorrow afternoon, we kick off with non-farm employment change. So this is the first main sort of news event of the week. I suppose PMI yesterday was really, but obviously we weren't here. So we got that coming out tomorrow. So I'll be streaming for that at 1 o'clock tomorrow afternoon. Then we've got the PMIs. Oh, am I? Hang on. When am I doing yesterday? Completely forgotten what I scheduled this week. I think I might be on later, actually. I think I decided to come on for the PMIs instead. 2:45, yeah. So I'm going to do the PMIs tomorrow because I think we'll probably get more of a move out of those PMI figures, judging by what the manufacturing ones did yesterday. We had quite a deviation, so we might well get a bigger move out of that. But we will get some movement off that tomorrow. Then we got Powell speaking later. We got the CPI for the Swiss franc on Thursday morning. So that is the main driver for interest rates, obviously, inflation. So if that comes out as that forecast, I think that Swiss is going to drop. So we'll wait and see what happens on that. But that's going to be quite a high impact one on Thursday morning. Unemployment claims for the US dollar. And then we've got non-farm payroll on Friday, or rather the unemployment rate for the Canadian and the US dollar, which is what it's really all about. So that's this week. Busy day Friday, busy day Thursday. The rest of it's kind of less impactive. So Thursday, Friday is where the main moves, if they're going to happen, will be this week. So there's no ADRs so far today. Obviously, it's the first day of the week, proper trading day of the week. So there's no weekly range hits. There's no monthly range hits either, obviously, because it's the second of the month. So there's nothing to look at on the ADR dashboards. RSI, Euro US dollar, is the main mover on the hourly after that US dollar move yesterday. So that's extended and embedded down there at the moment. So there's potential for a pullback on that. Gradual drop on that Euro US dollar, gradual strength on the US dollar, basically. So there was an entry opportunity yesterday. Somebody messaged me yesterday and said, why did they not get a trade on yesterday? So just to clarify, why this particular instance yesterday didn't trigger a trade on the position trader EA. So that's where we got extended on the hourly RSI. Now, it depends what settings you're using, obviously, but this particular person, as I am at the moment, is running the 15-minute time frame for entry signals, okay? And we're using a moving average to get in, So the conditions mean that to get into a trade, what the EA is doing is every time a candle closes on this time frame, 15 minutes in this case, it is saying, let me have a reading of the hourly RSI, please. And are we opening below and closing above the moving average, i.e., is there a signal to go long? When that signal there triggered, the RSI on the hourly time frame was not extended. That's why there was no trade on that yesterday. So just to clarify for anybody else that might be interested, the condition is the RSI extension. The signal is a cross. Both of those have to be happening at the same time when the candle closes for the condition to take a trade to be true. They weren't. The hourly RSI was not extended when that push happened. So just to clarify that for anybody, I don't know if the person that mentioned it to me is in here, but yeah, so that's basically how it works. You've got to have both at the same time. So if you are going, well, I wanted to get into that trade, there's two things you can do. First, you could switch down to a lower time frame, in which case then you're going to get faster signals. Therefore, you might get in quicker. In this case, though, I don't think you would have. Or pull the RSI down. Instead of using 80, use 75. Then you'll probably get into more trades. No right or wrong. It's just how it works. So yeah, so there's your extension at the moment. That is still extended right now. So there's an opportunity to go long euro US dollar. Pound US dollar is also extended only just though on the hourly. And we've got the US dollar Swiss, which is extended. Actually, that's coming out of extension now. There's a gap fill there. Haven't got any other brokers open. I can check. But this is slippage. So when we have a bank holiday and there's a large order goes into the market by a big player, if there's not enough liquidity to fill the orders, obviously the market slips to find the liquidity, basically, which is basically what's happened there. So that gap is potentially in that market there. Gaps tend to get filled. So there's a good chance that we might, this is what I say, this move yesterday was probably caused by slippage and low liquidity rather than genuine market sentiment to go long US dollar. So this is probably going to undo today. So good opportunity to go long against the US dollar this morning. There's some 4 hours as well. Euro CAD is extended on the 4 hour. So there's an opportunity for a long there. I'm already in that one from last week. Euro US dollar also extended on the 4. That's down to the 20 level. So very extended. So looking for a pullback on that movement. We've got a lovely support coming up on the monthly within ADR today. So there's a good opportunity for long on that. That's the same on the hourly. Pound CAD is also extended to the downside. So that's a nice opportunity for a long, pretty much the same as that one there. Yeah. So same play basically. And pound US and New Zealand CAD. So pound US, that one's we just looked at because that was extended on the hourly, and New Zealand dollar CAD. So I got into an aggressive on this on Thursday last week. Can't remember when it was. It's somewhere back here. Yeah, and basically just waiting to get some kind of pushback on this. So I'm in with one aggressive from there somewhere. Can't remember when it was. We've just hit the monthly level. And we bounced off it beautifully. So that was that wick there basically from the previous month. So we had a lovely bounce off of that, and it's just pushed through it today. So there's no real stopping point until we get down to that support, which is about 250 ADR away from where we are at the moment. So I'm hoping that we're going to get a pullback on this leg at some point this week, because it's been basically 3 weeks solid now down with no respite whatsoever on this. So looking for some weakness in that US dollar, or OPEC today to come out with tomorrow. So I think it's OPEC tomorrow. Yeah. OPEC tomorrow to come out with some kind of negative news on oil, which will obviously weaken the Canadian dollar, which give the New Zealand dollar a bit of a chance to kick. But very weak New Zealand at the minute. So those are your RSIs. So nothing particularly exciting apart from really Euro US dollar is the most extended thing we've got at the moment. But very difficult today to really read much into anything, because obviously we're off the back of a bank holiday weekend. So we've had last proper trading day was last Thursday, which was also end of quarter. So everything kind of resets today. So we'll see where things go. But we have got a few extensions to look at there. So, but I'm going to go through all the pairs today. And we'll just have a look through everything. Morning, Momo. Morning, Chucks. Morning, Neo. So let me just get a drink. Somebody mentioned in the Discord channel over the weekend as well about one of the videos from the Transparent Trader, if anybody's familiar with him, Jared, the bald guy, I call him. And there was a strategy, basically, it's an old Larry Williams strategy that looks at multi-day pushes. So this is something that I've been looking at for a while, and I backtested this strategy. I beat on EA to test the strategy. But basically, when you get 4 days in a row that have the same color candle, like there, for example, you start a short position. Yeah. So his strategy that he built an EA to test was basically backtesting Larry Williams's old strategy, where you get 4 days in the same direction, and then basically you take a short in the other direction. As you can see, there's a number of times where it just doesn't work at all, like all strategies. So it's another way that you could get into the market. Instead of using RSI, you could say, I'm going to wait for 4 green days or 4 red days. Not sure if that's red or not, but and then you start to take your first position. So it is something that I could incorporate into the Position Trader EA. I have already built an EA to test that strategy, and it doesn't work, as with all strategies. Everybody that backtests all these strategies and put these videos out, they're all using historical data, and obviously it's got nothing to do with the future. So I'm just seeing if I've got it here. Bars, 4-bar fractal, was that it? No, that was a different strategy. Outside bar reversal, no, haven't got it there. But yeah, so basically with all these strategies, basically I love the way that Jared does stuff. He's really good. Transparent Trader, go and look him up on YouTube. Really good stuff. Don't read anything into anything he says, because it's all backtest. It's all theory, which is fine, but everything that he does is all curve fit. So he will say, we've got a great strategy, which is an old Larry Williams strategy, and it's going to trade the pound US dollar. Yeah, no strategy, if it only works on one currency, is a sustainable strategy, because it's curve fit to that currency. You take that strategy and you place it on the New Zealand dollar CAD, it will blow the account. It will just hemorrhage cash, because it's curve fit to a 94% strike rate or whatever for the pound US dollar over a historical period where it's picked the best possible conditions to trading. Never going to happen again. So it's all good in theory, but like everything, all these strategies that have an inkling of, yes, they might work because there's been a condition met, sometimes it will work, sometimes it won't work. Yeah. So the 4-bar push here, for example, didn't work, because for the next 2 days it continued to drop. Then you had 1 day pullback, then it continued to drop again. Didn't work, did it? But there, it did work. What's the strike rate? Same as everything, isn't it? But you can use these sorts of strategies to turn them into position trading strategies, which is what the Position Trader EA is all about. If you see a 4-day move in one direction and you think that looks like a good long, hit the buy button. If it doesn't work out, position trade it. Great. So I just wanted to cover that. I don't know I think it was AZ that brought it up in the Discord channel. But yeah, it's a good entry criteria for position trading as an alternative. So if you don't want to use RSI, you could use that. So if something's pushed for 4 days in one direction, get in short. Yeah. If it continues to push, scale in as normal and get out. Exactly what we do at the moment. But as I kind of said in the Discord channel, I think what you'll find is on that 4th day, if I mark it there and you drop down onto the H4 time frame, I think what you'll find is the RSI is probably extended. Yeah. So what is a 4-day push? RSI extension. It's the same thing. Yeah. RSI is going to give you pretty much the same signal as if something goes parabolic for 4 days. Because it's gone parabolic for 4 days, it's going to be extended on RSI. So might as well just use that. Doesn't matter how you get in, does it? We're looking for the market to have pushed hard in one direction for a period of time so that they're ready to unravel it. So option there, if you want to use that, it's just basically multiple days pushing in one direction. But as you can see, it worked sometimes. Other times, as in there, it didn't work at all. Yeah. The other problem with the 4-bar push or the 3-bar push or however many bars of push you want is what you'll find is you'll get the market pushing for 3 days like that. and then you'll have a doji, and then it'll push for another 2 days. Yeah, you won't get in on that because that's not a 4-bar push. Doesn't meet the rules, does it? Whereas with RSI, those 2 extra days would have triggered a signal because it's measuring the relative strength overall, not just over a period of time. So I don't know. Anyway, go and play with it if you want to and have a look and test the strategy. It's easy to backtest because it's on the daily charts. So it's very easy to find 4 days where it's pushed in one direction, see what would have happened. But see what would have happened if instead of doing what he did and getting out when something happens, just scale in and then get out when it's profitable. It'll work. Right, so we're going to whiz through all the pairs. Morning, Brian. If there's anything specific you want to look at, let me know when I get to it. But I'm going to cover everything anyway. So just going to whiz through all the pairs and just see where everything is, see what's going on, see if there's any good support resistance bounces. And just see basically opportunities and where everything is likely to go. So as with everything at the minute, we are still waiting on interest rates. We are now in March. So we've got 3 months now until the US is going to potentially reduce those rates. So the US is forecast to go first and put that quarter percent drop in June. So we are in April now. So we've got May and June. Well, so all of April and May and then June. So it's somewhere between 2 to 3 months time. We're going to get that rate dropping as long as the inflation continues to come down. Obviously, that can change. If that suddenly starts bouncing up for the next 2 months, that's not happening. So we're getting closer to potentially a period of high volatility because what the market is going to do in the run-up to this interest rate change is it's going to start to factor that in, which means the US dollar should start to weaken at some point. And typically the market tends to make its move anywhere between 3 to 6 weeks before an interest rate change. So interest rates normally are released every month. So what you tend to find is if there's an inkling that the US is going to change rates next month, for example, that entire month will be either bullish or bearish, depending whether they're going to drop or rise the interest rates. Yeah. We've been sitting here for months and months and months on everything, waiting for some inkling as to when interest rates are going to change. The market is factoring in a 50-50 shot of it being June at the moment. So we should see this move, I reckon, start any time towards the end of April, early May. Could go sooner, don't know. But with everything at the moment, until we get these interest rate drops, as you can see, we're just going to be kind of doing an awful lot of sideways movement. Oh, you are here, AZ. I think Jared was only using it on the pound dollar, to be fair. Yeah. It's all of his stuff is curve fit. I've built, I've watched all of Jared's stuff because the reason I like him is he's very much like me. He's very practical, very logical, very data driven. Yeah. It's all statistics. Yeah. But he's fixated on Larry Williams's work, which is great. But all Larry Williams's work is investor timeframes. It's daily charts. Yeah. Doesn't suit day trading at all. No use. It's all daily time frame. Yeah. You try and bring any of Larry Williams's work down onto the hourly charts and the 4-hourly charts, it fails. Dramatically fails. It falls apart because it's all to do with daily institutional movement. So and it's all curve fit, like you've just pointed out. Yeah. I can get anything to work on you give me any currency, right? And I will give you a 500% return over every year. Easy. Because all I'll do is I'll curve fit a strategy to fit that instrument. Yeah. So I will just go, right, let's pick Aussie CAD. So if I had just sold the 80 levels and bought the 20 levels, yeah, I would have had 100% strike rate because I'd have gone long there, I'd have gone long there, I'd have gone long there, and I'd have gone short there. Pick this up, go and put it over a 10-year period, you won't get 100% strike rate. You'll get a whatever percent strike rate. Go and take that to another instrument, you'll get a completely different strike rate. Yeah. So this is what he does, Jared. He goes, we're going to find a strategy for the Aussie CAD. A strategy has to work on everything. there isn't something you can work on just one currency. Everything has a different movement over a different time. Sometimes the Aussie CAD will be like this for 6 months. Then the interest rate will change on the Canadian dollar and it will do this. Then it will go back to that because the interest rates don't change. Yeah. If you test the strategy over that period, it ain't going to work there. If you test the strategy over that period, it ain't going to work there. If you pick up the strategy that worked on all three of those and put it onto another instrument that doesn't have the same exact profile as Aussie CAD, it won't work. This is why you find a lot of these EAs, people publish these EAs and they go, this works on the new Aussie dollar, New Zealand dollar during the Asian session. I'm sure it does. Yeah. In the past, but it's not a viable strategy for anything else. What happens when the Aussie New Zealand in the Asian session picks up volatility by 100%? Ain't going to work. Yeah, everything's curve fit. So while it's all logical and it has a basis in theory, I've built every strategy. I've got some in here. I just showed you some of them. Yeah. Don't know if you can see it. It's probably behind my head. But in here, I've got some of his strategies. Yeah. The double sevens, yeah, 4-bar fractals, smash bars. I've tested them all with everything that he's said and more. I've put more of my own knowledge and criteria into it. Yes, they all work. Pick them up, put them on another instrument, they don't. Pick them up and put them on another time period that they'd never seen, they fail. But they all have a modicum of success, which can be used in position trading because they are all, Larry Williams is a reversal trader. Yeah. And this is why I kind of like the work as well, because Larry Williams is all about picking tops and bottoms on daily timeframes. He's trying to pick the tops and bottoms, which we know is very difficult to do with a stop loss on an hourly, on an hourly or a 4-hourly or a 15-minute time frame, virtually impossible. On a daily time frame though, if you just scale in to a smash bar play 3 times, you'll get out virtually all the time. So they're all good strategies to turn into position trading strategies. And I haven't tested that yet, but now I've got the position trader EA, we can do that. So we could easily do that, couldn't we? If we go over to the daily time frame on the US dollar CAD and just go into the tester. I don't even know what settings I've got in here, but we can basically test all of his strategies in manual mode. But rather than using any kind of stop loss mechanism, we can just basically get out with positions. You probably want to scale in, yeah, 3/4 of an ADR, I guess is probably about right, actually. Haven't even got the buttons set. That's not going to work, is it? Let's turn that off and off. Not awake this morning, is it? Why is that not working? Whoops. I don't know why that's not working. It's probably something to do with the settings I've got set up. But yeah, you can test it all, test all the strategies. So just let it run in the tester. I'm just wondering, I've got a development version I'm working on. I'm wondering if I've got the development version in here, which might have a bug in it. Oh, no, there you go. So yeah, you can adjust the speed down, and you have to do this on the daily time frame. But just wait for, you get 4 candles, and then just right, the candle's closed. Let's go long, and just wait for it to play out. Yeah, you test it all, but turn them all into position trading strategies. Don't try and trade them with the exit mechanisms that he used. Anyway, so what was I talking about? Aussie CAD. Yeah, we're going through all the pairs, aren't we? Got sidetracked again. So Aussie CAD, we are obviously stuck sideways, as you can see. As we are with everything at the moment, we are sitting in basically either narrow ranges or wide, weird range bound situations at the minute, while we're waiting for one of these guys to decide that they are going to change their interest rates, which at the moment obviously isn't happening. So highs and lows is really the thing to be playing at the moment. Bouncing off of these lows, previous highs, and just looking for propulsion gap fills. So the usual sort of stuff, but ideally at the moment, you just want to be looking for good support resistance bounces. The RSI extensions we're getting are at the moment a little bit squeezy, because what we're tending to find is either you are stuck range bound, or you've got something that has got a slight advantage like the US dollar or the Swiss specifically, because they changed the interest rates. And those are getting squeezed. So any kind of support resistance bounce play at the moment is probably a good idea while we're waiting for the interest rates to drop. But keep the exposure very low at the minute, because if it is going to go into a squeeze, because we're not getting market structure very much at the moment, we're getting all of this. It's not very easy to position trade at the moment because we are not getting that type of movement. We're not getting the pullbacks. We're getting pushes and stuck within ranges, which means it just takes forever to get out of anything. You just seem to sit in drawdown for an absolute age. So there is no advantage Aussie CAD at the moment. There's no reason to go long, no reason to go short on either of them. It's just basically waiting for that US dollar movement, and then that will move the CAD. So working around news events at the minute, we haven't really got any specific CAD news until Friday, which is the unemployment rate. So that's when we would expect to get some movement on the Canadian dollar. But it will potentially move off of any US news as well. Obviously, we've got JOLTS coming out. We've got PMIs tomorrow afternoon. So there is potential for movement on the CAD. But right now, more of a long than a short because of where we're sitting and what kind of reaction we've been getting at this level. So they're not really looking to let it go below that level at the moment. So good looking long. No RSI extensions though. We haven't had any RSI extensions to the downside since the beginning of February, all the way back there. We've had 2 short opportunities. That one there, which I got out of because we sat sideways for 6 days and I said, screw it, I don't want it anymore. Obviously, that was the day it dropped. And then we had that one there. So there's only been 2 short opportunities. But this is the trouble at the moment. Trying to get into stuff is very difficult because we're just not getting those extensions at the minute. So anything that's support resistance based is a good opportunity. So using these weekly levels, and using the monthlies for finding areas. Aussie dollar Swiss sideways for a week and a half. So that was last week. Just kind of sitting in the middle of this breakout up the high from last month. So we broke out of that kind of 2-week sideways move, which was a previous breakout. This is what I mean. We're getting nothing, bit of news, nothing, bit of news. That's the movement at the moment. There's no market structure. It's push, sit, push, sit. That's what we're getting. It's very, very difficult to trade. So if we get up to the highs, you're going to get one or two things. It's either going to bounce off of it, or it's going to get a news event around about that time, which will either drive it back or it will break out, and then you're going to sit there for a bit. So if we are getting any extensions on ADRs that are at good support resistance levels, they're good shorts and longs. Other than that, you had one short there, which you can see I got into that one there. We had one there, as you can see, I got into that one there. We had a long down there, which was a nice easy trade, but that's it. There's very little on any of this over the last sort of couple of months. So sideways still on this one, but I'd be looking for shorts somewhere up there, and be looking for longs definitely off this area here. So we got this low from last week, which is just over ADR, and then we've got that triple top, which is going to have some limit orders triggering at that because that's where they broke out. So if we do get down to there, that'll make a good little long. If we do get up to there, good short. May get an RSI extension, depending how fast it moves up to those levels. All the yens, I'm going to go through all the yens in one go. as usual, because we're expecting the Japanese either to intervene or for the market to push the yen up. So obviously everything will come down against the yen if the yen is rallied. So everything, I think, is still a short opportunity. As you can see, that was my last trade on the Aussie dollar yen. Nothing last week on this one, but overall, if that US dollar yen pushes above this level, the Japanese are going to start to think about the intervention move, which means that everything will come down against the yen. So if you're going to buy it, you want to be watching the US dollar yen. If you make any buys against the yen at the moment, so if you want to go long Aussie yen on a double bottom bounce or on an ADR extension or anything like that, you just want to flick over and watch the US dollar yen, because if that US dollar yen rallies, this thing is going to be in danger. Yeah. So all the yen pairs looking for shorts or in shorts or whatever, just you don't want to be buying this specifically at the moment, because it's more likely the Japanese are going to put an intervention move in, or the market is going to be scared of that happening and isn't going to push it. So either way, all the yens you want to be looking for short opportunities. So if you want to get into any, look for pushes up at ADR, at resistance, even there, coming off of that level there. Look for propulsion gap bounces, any reason to get in short basically on these. So nothing on that one at the moment. Specifically, Euro yen, I'm in from last 2 weeks ago now. I'm still holding this short. I could get out of it at some point, but I can't see any reason not to be short positioned on it. So I'm just going to hold my yens at the minute and hope that the Japanese put an intervention in. Pound yen, last entry was there, which was on that RSI extension there. Again, nothing last week. We basically, the US dollar yen went completely sideways as we looked at the chart. Everything else did the same. Yeah, nothing's going to move against the yen when the US dollar yen's going sideways. So we are just sideways on it at the moment. I wouldn't want to really take that long, but if we did push up into there, that would be a nice looking short opportunity. New Zealand dollar yen, already short on this one. I had a short which I got out of there. I got in short again on that pullback. And I'm holding this again. No reason for this one to be bullish. New Zealand dollar is very weak at the moment. Japanese is either going to power up or they're going to intervene, which is going to drive it down. So just I'm short already, holding it short. No targets on anything at the minute. Just waiting to see what happens with the yen and US dollar yen. So as we know, threat of intervention, market pushes down, market push back up. Threats of intervention started again. Super strong threats of intervention started. Market completely sideways for 2 weeks. So again, if this pushes up, bang, it's coming down fast, or the market will do what the market does and get the message. Yeah, it's what's happened previously when the intervention threats have come is the market does as it's told. Yeah, it got threatened with intervention at 145, did as it's told. Then defied them. Yeah, does as it's told, then defies them. This is how we play the yen. We threaten them, they threaten back, basically. So, but the thing is, obviously, they've got the power to press the button and destroy everybody that's gone long. So, just doesn't make sense to want to press the buy button against the yen in any shape or form at the moment. But this week, again, we're up at the highs, up at the 152 level. Yeah, some people are talking about it breaking out of this level and going up to 153, 154 before they intervene. They've never done it before. There's everything in trading is based on historical information. History is made every day. Yeah. So yes, it could well push above 153. They may decide to do nothing but threaten until they get to 154. It might get to 152 and they say, screw it, let's do it now. It might be that we sit there and they go, this is taking too long, and they press the button. It might be that the market just sells off. I don't know. Either way, I want to be doing that at some point. So the danger with all of these yens is the swaps are so high at the moment. The longer you hold them, the more you pay. So just be aware of anything you get into. If you're holding it and it's going sideways, it's just costing you money every day. And it's the most expensive currency out there to trade at the moment because obviously interest rate differentials. So we are sitting on 0 interest rate and 5.5. So that's what you pay. Yeah, you pay the differential. So it's, or rather the overnight swap is based on the differential. So the higher that differential, the more you're going to have to pay on the pair. So if you're longing anything against the yen, happy days, you're going to make money. But if they do that, you're going to lose everything. So there's no point in going long just because the swaps are positive. Swaps are a cost of doing business. It's just you've got to use your head a little bit about holding it. The longer you hold it, the more it's got to move to make you money. So, but that's all the yens. Short plays on all of them. Yes, it could well push. Don't forget there's 2 currencies at play. If the US dollar yen sits sideways for the next 2 weeks, but the Australians increase their interest rates, this thing's going up there. Yeah, but that isn't going to affect the Japanese's decision-making process. That's what the US dollar yen's going to do. So, so that's all your yens. Same as last week, same as last month. Just looking for opportunities for it to drop. Morning, Emmanuel. Morning, day trader. Aussie New Zealand, I'm in shorts on at the moment. I've got a little bit aggressive on this just because it's stuck. Totally stuck, as you can see. Again, it's the same thing. It's this do nothing, bit of news, do nothing, bit of news, do nothing. This is what the market's doing at the moment. It's incredibly hard to trade because there is no structure to it. It's just a grinding mess at the moment, this Aussie New Zealand. And it's at the point where I'm thinking about cutting half the position, just taking a loss on it because it's just not going anywhere. Any day, this could drop. And they could just undo the position, basically. But they're not at the moment. This is what a squeeze is. It's the market just squeezing and squeezing and squeezing until there's nobody left to squeeze, and that's when the move happens. That's usually when you get out. So this was the interest rate change, or rather no change on the New Zealand dollar. So there was absolutely no reason for them to weaken the New Zealand dollar based on them not changing interest rates, which is what they'd said they were going to do. And the market since then has ground. The Aussies not had bad news, not particularly good, but it's just a little grind at the minute. So I've got an aggressive entry on that one on Friday. Yeah, it was Friday. So it was aggressive on Friday. Stopped out. Well, didn't stop out. Spread it out on the swap. Yeah, obviously you can see where I got stopped out. I got stopped out there. That's where price was. And that's what they did with the swap. So they decided to spread the market by 42 pips. So ADR on this is 39. They spread it by more than an ADR to take my stop loss. Yeah. More than an ADR. Nothing you can do. If you put a stop in the market, it's there for the broker to take. So, yeah, stopped out on that one. I haven't got any more positions on it at the moment, but I'm going to start thinking about scaling out of this. I'm managing this manually now. The Market Reversal Alerts EA took this initial trade for me, wherever it was, back here in mid-Feb. And obviously since then, we just didn't get that pullback, and we've not had a pullback on it since. So I'm manually managing this one at the moment. I'm just basically taking manual trades because the Market Reversal Alert CA I've turned off. So I will probably just jump ship on it and take a loss if it continues to push. In fact, I'm just going to put some stops in place now just so that my broker can have another field day. Might just go above ADR. So I'm just doing a partial scale out on it. So I'm going to completely close that one out. And I'm going to take off that one because these two are a bit close together. One of these was taken with the Market Reversal Alert CA and one of these was taken manually. So they're a bit close together. We haven't gone anywhere since that trade and that trade was taken. Look, they were taken 3 days apart. We're now 6 days later. we still haven't gone anywhere. So if we're not going anywhere in 6 days, there's a very 50-50 shot. It's either going to do that or that. And if it does that, I'm not staying in it with 2 positions that close. So I shall get out of one, take the loss on it. So that's Aussie New Zealand. No idea where that's going. The fundamentals for the Aussie and the New Zealand, we had the monetary policy meeting minutes this morning, which did nothing. We have nothing else scheduled for the Aussie or the New Zealand this week. So there's nothing there basically to help at all with that one. Aussie dollar, US dollar. Again, last week, very, very sideways. We had a little bit of movement on news, which got undone, but we opened the week there. We closed the week there. We haven't gone anywhere. Just didn't go anywhere again. Every news event is undone. It's just nothing moving logically at the minute. So just look for areas they've bought at before, which is kind of where we are at the moment, and look for them to come back up and retest all this propulsion move. So very strong sell in that A-shaped recovery out of the news. So in fact, these are really not actually that valid. If you look at these propulsion gaps, they're just part of an A-shaped recovery that happened over 24 hours. So not really necessarily good targets to use either, because they're not part of an accumulation break. They're just part of a 24-hour undoing of a news event, which was pointless, which is literally all we get out of the news at the moment. It's just pointless news, pointless. Yeah, it's just pointless news events. Because no news means anything until the interest rates change. So it's all just spiking to fill liquidity. So we've got 2 nice areas coming up. We've got that previous month's low at ADR, and we've got last month's low, which is pretty much where we are at the moment. So nice looking long, playing it up into there, or potentially up into there, which is still, good ADR, and push down, scale into a move. If we get back down into that low there, you're going to find limit orders triggering there, which they already have yesterday. And you're going to find limit orders triggering there. But at the minute, just sideways, when you open and close at the same spot, it's just pushed up, pushed down, nowhere. Just a week of sideways. You've got to try and time the intraday movement, which is virtually impossible. Interest rate for New Zealand is the 10th of April. Yeah. Not changing though, is it? So next week is the interest rates, but there's no reason for them to change it at all. So CAD Swiss. So CAD Swiss rallying again this morning. We've broken out of this high from last month. US dollar Swiss also rallying, I would imagine. Yeah. So I've just stopped out this morning on another position there. Again, just stuck on this as well. We'll cover that one when we get to it. But CAD Swiss, so yeah, big push up, sideways move, undid the news, but the Swiss franc obviously is going to be weak. So it's very hard to get into a long position. I said this was the best possible long entry on a pullback after the news, and it did exactly that. It bounced beautifully. But as you can see, what you really got out of it was 2 days worth of movement and a week's worth of nothing again. So the bias for the Swiss franc is bearish, which means everything is along against the Swiss franc from a fundamental perspective. So anything you've got shorts, like I am with US dollar Swiss, if we get another push this week, it's time to cut it. There's no point in holding it. It's just a loss. So the fundamentals shifted unexpectedly on the Swiss franc. They decided instead of doing what they said they were going to do, which was keep the interest rates at 1.75, they shot the market and said, actually, now we're going to drop them. Sorry about that. All the positions you've got, tough. Which is what they've done many times in the past. So we got this big rally against the Swiss franc, and obviously the fundamental shift now is bearish on the Swissy. The market had factored that in to a certain extent because they started to go weak on the Swiss before the news. So it's just confirmed now. So that is the most likely move, unless we have something fundamental change, i.e. the war in the Middle East kicks off. Now we've got other parties getting involved now. Iran getting involved as well now because there's been bombs going off there, which Israel have potentially been involved in. So there is much more escalation potential in the Middle East at the moment. If that kicks off, people are going to pull money out. I say people, institutions are going to pull money out of unstable currencies which are related to commodities like the Canadian dollar, the New Zealand, the Aussie, and they're going to drive them into the Swiss franc, nice and safe. So that is the only saving grace for the Swiss franc. It is a safe haven currency. If there is an escalation in war or any other kind of financial problem, that will power up. Obviously, there is the opportunity for the Canadian and the US to get some massive negative news as well. So if unemployment skyrockets for any reason, that's going to hurt the CAD. So there are things that will obviously affect this, but the fundamental bias really at the moment is everything probably more long-term long against the Swiss franc. So the problem with longs is trying to find entries. So when something is pushing and pulling with market structure, you're looking for market structure pullbacks. So with the CAD Swiss, as we are at the moment, you're looking for RSI extensions to the downside, ADR hits to the downside for long opportunities. But equally, you know, it's like everything. At the moment, that's the situation. This afternoon, there could be a news event, which means that totally the opposite situation. Yeah. This is why I pay attention to fundamentals, because that's what drives the market, not levels or anything else. It's literally what's going on with the world. So at the moment, we're pushing out these highs. This could just be a false breakout and the end of this move, and we're just going to correct it for a bit. So we'll have to wait and see what happens with it today. But so far, big moves to the upside. Yens, we've covered them all. Shorts. The euros, at the moment, the euro news this week, we've got the German CPI today. Just see if anything's been released. None at the moment. So no CPI figures out from Germany yet. PMIs are positive. So yeah, I mean, as you can see, it's just that at the minute. So highs and lows, looking for buys in these sorts of areas and sells in these sorts of areas while we're waiting for some kind of confirmation from Lagarde as to what they're going to do with interest rates. At the moment, the only confirmation we've got is roughly falling in line with the US, which is June. So there's no fundamental bias in either direction for this one. So yeah, as you can see, I've had multiple trades on this. There's one there, one there, one there, which is just the normal RSI extensions. Yeah, so as long as something is going sideways, your RSI extensions are going to work like a charm, because if it pushes up, the next thing it does, if it's going sideways, is come down. So all the time, we've got no fundamental bias. We should be fine longing or shorting it. So wait for ADR hits to the downside, ADR hits to the upside, RSI extensions as usual. So nothing on that one at the moment, though. EuroCAD got a long on from last week. Second entry's gone in on that one this morning. Just gone in. Literally just gone in. There. While I've been talking. Yeah, first entry was taken on that one here last week. That was on Friday. On Friday? Yeah. So looking for a push up into that propulsion gap. Second entry's just gone in. So I will monitor this. If we can get back up into these highs somewhere around there, I might get out of the whole lot there. But we'll see. But again, Canadian dollar, we've got lots of news this week. We've got the unemployment rate coming out on Friday. We've got a fair bit of US news coming. But the Canadian rallying along with the US dollar. So it's just a case of this is pushing with the US dollar at the moment. That US dollar move is probably going to unravel at some point. So yeah, just usual stuff. So that was your RSI extension. Entry up into that propulsion gap at the moment. So looking for testing of this level here. So that propulsion gap is a nice safe target to aim for, which is also a pullback if we continue south. Nice and easy achievable target. Euro Swiss, again, undid the move, continued it. This is a little bit more tricky to read the Euro Swiss, because the euro moves with the Swiss franc and the Swiss franc moves with the euro. So you tend to get an awful lot more of the sideways movement and tight. It's very, very small ADR. In fact, it's a bit bigger now. It's 58. It was a lot smaller. We were down in the sort of late 30s, early 40s prior to that move. So it's a very usually low moving pair, because obviously when we get Euro news, the Euro pushes and the Swiss franc pushes as well. So when you get two currencies pushing together, you don't really tend to get a lot of movement because they're pushing against each other. And the same with negative news. The only reason you get a big strong move is if one of them has a news event that doesn't impact the other, interest rates or inflation. So at the moment, the Swissy should, in theory, be a little weaker than the Euro, but you're not going to get an awful lot of movement on this one. So it's not really the best pair to trade. You're going to find it difficult to get any entries on it. There was an entry there, and there was an entry there. You can see I took that one off because I didn't like it. I just didn't fancy shorting against the Swiss. It would have played out if I'd have kept it on, but don't really see any reasons to trade this in either direction at the moment. If I had to be doing anything, it would be going long. So market structure, again, on this one, it's all so big, the moves at the moment, but that market structure is officially bullish. So, but you'd be looking to go possibly up to there and then pulling back at the moment. So it's just very, very weak bull move, isn't it? So any kind of short, low entries would be good to take. So I've just missed out on the RSI extension down there, which would obviously be playing out very nicely now. But yeah, same with the euro pound. Euro and pound move together. ADR on this is 28, doesn't move. There's very little trades on it. I had one there. There's some longs I got out of up there, which I'd been in. So this one, euro pound, I was in from January. Literally, it was, I think it was the 3rd of January, first or second trade I took of the year. And just milked it all the way through here, making money, and then got out in the propulsion gap, which obviously we then tested. So, but market structure is now bullish. So we put in a higher low, we put in a higher high, we put in a higher low. So it's more of a buy than a sell. However, fundamentals will shift very quickly on this. As soon as Lagarde or Bailey come out and say anything about interest rates, this will take off. So right now, we are both forecast to do the same thing, which is follow the US sometime around June. As long as that stays as is, that's what we're going to get. So there's no advantage to going long or short. You can take RSI extensions to the downside long. You can take shorts and when we're extended to the upside. ADR hits to the upside. ADR hits to the downside. Usual stuff. Anything that's going sideways, mean reversion will work all the time, because as long as it's going sideways, you're always going to have an exit. So opportunity there at the moment, kind of for a long off that reversal alert we've just had, pushing up into these highs. We should really, in theory, put in a new higher high on it, but we'll have to wait and see what happens with news. And it takes news to get you there as well. If you look at this, yeah, there is no movement until there is news. Then there is movement. Then there is nothing. Yeah. So you can basically set your sort of watch around the news and say, right, what is going to move this week? It's these news events. That is all that's moving stuff, isn't it? So we haven't really got an awful lot of it. We got the CPI for Germany coming out today, which will probably move the euro, but that's a staggered release, so we're not going to get anything impactive that we can time. And there's no other real news for the pound or the euro this week, so not a lot else we can use apart from the Swiss franc. So the CPI on Thursday will probably impact the euro, but that will impact everything. So nothing really exciting to look at there. Sideways. Euro New Zealand, very much the same. It's grinding like hell, this New Zealand dollar. It's just grinding. Bit of news, nothing. Bit of news, nothing. Bit of news, grinding. No market structure on anything. It's just sideways messes. Loads of them. So, again, no fundamental bias on it. I had shorts there. From there, I had a long there, and that's it. Nothing else. Only literally those two trades this year. That's all I've had on it. It's just not really doing a lot. There's no bias. So if I was going to do anything on it, I'd want to be shorting it at the moment, because it's probably going to come back down and retest all these propulsion gaps. But this is the kicker at the moment, this New Zealand dollar rate freeze, which was forecast, which for some reason the market immediately said, no, we don't like the New Zealand dollar anymore. No real reason for it. It just did. So I suspect we're probably going to, and it looks like it is now, come and try and break out of these lows and start a move. But as you can see, we're totally sideways. So if we do get out of these lows, I suspect that is going to be a peak formation high. And we will start a drop. And the drop will come back down to retest these old propulsion gaps. So you'll be looking to test that level there. And then you'll be looking to test that breakout. So, but that movement at the moment, which is kind of 2 to 3 ADR, is going to take 2 to 3 weeks, because there is no reason for it to suddenly take off coming up. So, you know, you're looking at weeks of potential hold on this sort of thing. So just be prepared. Euro US dollar coming down very nicely at the moment. US dollar strength. We've had a very good strong move on the US dollar, although it's been very erratic. So looking for pullbacks on this at the moment. So we're looking for some weak US news this week. We've got plenty of news events this week. We've got non-farm payroll, obviously, the unemployment rates coming out on Friday. We've got ADP unemployment on tomorrow. We've got PMIs tomorrow. So there's plenty of reasons for the US dollar to get movement this week. And it all will depend on whether it comes out as bullish or bearish. If it's all bearish, we'll be seeing pushes up on Euro US dollar. If it comes out as bullish on the US, it will probably continue to grind its way down. So we've got good levels coming up for support on this down here, or good monthly level, which is ADR today. So this is within reach today easily. If we do get a strong push down into there, this propulsion gap is going to be a beautiful target to aim for. So there was a potential entry on this. This is the one I covered this morning. There was a potential entry on it, depending what time frame you were looking to get in on. If you were using M5, you may have got in on that. But it was a very sort of spiky stop type move. So not very easy to get an entry on with the position trading EA. With the market reverse alerts EA, you would have got an entry on that just there. So you would have got the entry on the market reverse alerts EA. Again, people keep asking me what's the difference between the two. One of them uses market reverse alerts, the other one doesn't. Pretty much it. So the conditions are slightly different, obviously, for both of the EAs. But at the moment, this is just grinding. So Gina, I think it was probably maybe asked. Hello, Gina, by the way. Nice big pink wavy hand. So pushes up into retest this propulsion area potentially. Again, it's all going to be news driven. If the US keeps getting negative news in its run up to the June rate change, assuming the June rate change happens, this should really start to grind back. As we have for the last 3 weeks, it'll probably start to grind back in the opposite direction. But at the moment, it's getting nothing but positive news, the US. So all the news releases have come out either as expected or ever so slightly positive, which is obviously giving it a slight positive stance. Because we've got no real strength in the euro and no real weakness in the euro, if the US continues to get positive news, it's just going to do nothing but that. If it continues to get weak news, it's going to do nothing but that. So all driven around the news, but we have got a nice support coming up as well. So if that does get back down there today, I should probably get along on that. We'll see. Pound odd, totally sideways. Loads of trades on this over the last couple of weeks. So one there, one there. We had a long there, which I got out at break even. We had a short there, had a long there, had a short there. So loads, just lovely, absolutely beautiful. This is probably one of the best things to trade at the moment, because the movement is very strong. As you can see, the relative strength is good. We're getting good, strong intraday moves and unmoves, undoing of the moves. So it's very easy to trade. Supports, resistances, yeah, and we're basically here at the moment. So if we get a continuation push down, we should get an RSI extension, getting long, and just keep doing that. No reason to be bullish or bearish pound, no reason to be bullish or bearish Aussie. So sideways, totally. You can do with it. However, when it does break, it will be because of a fundamental reason. So when it does break, that's the one you want to be careful of. Pound CAD, again, not an awful lot of movement. We had this New Zealand dollar. No, that wasn't New Zealand dollar rate announcement. Which one was that? Must have been the pound one, I guess. But yeah, we had a news event, retested it, off we went, came back down. We are now back in propulsion. So we've got propulsion gap targets to the upside to come back and target. We've got one there as well. So good potential long opportunity on this one because obviously we've been pushing down. So last entry I had was there. Not quite come down fast or hard enough at the moment to get into an entry on this one, but that's what I'd be looking to retest, which is that breakout. So this is where the sellers are sitting. So yeah, if we can get back up to there, but we're going to need to push down to get a long opportunity on. So we got 150 ADR is the monthly support, just shy of it really, 125. So any kind of extension down into 125 ADR, 150 ADR level, you're going to get an RSI extension if it does that anyway. Good looking long opportunity, but again, got no news catalysts to move that at the moment. Pound Swiss rallying. Again, Pound Swiss, one of the ones that actually undid the entire move on that Swiss franc interest rate. And then obviously it rallied back up again. So we are stuck inside a very wide open volatile range at the moment. Pushing up, almost got an ADR hit on this. This Swiss franc's really weak this morning. So again, short opportunities if we get an ADR extension up to there. Potentially that's what it will do. So if you are going to get shorts against the Swiss franc, don't get greedy. Just look for quarter of an ADR, third of an ADR, half an ADR. That's about to hit ADR. That'll be our first alert of the day in a second. So yeah, bang in the middle of the range. Well, actually not anymore. There we go. CAD Swiss just hit. So the Swiss franc dropping hard this morning. So that's CAD Swiss. Yeah. So that breakout continuing. Pound Swiss pushing up. So you're just about to get an ADR alert on that one. So that propulsion move there is potentially where you're going to find some sellers. But we've got a propulsion move this morning here where they're buying from. So if you do bounce out of that, you're probably just going to ricochet back down into there and out. So that's what I mean. If you're going to get into these, you want to get out quick because that's the bias. The bias really is that. Yeah, so the Swiss franc is weak. They dropped their interest rates unexpectedly. They've gone before the US. That is weak. So you're much better off looking for long opportunities against the Swiss if you can get into them. But when you've got something that's expected to go long, it's quite hard to find an entry because you've got to be picking pullbacks. So that's a nice 61.8 retracement there. That was your entry this morning if you're using fib sort of entry systems. So, but yeah, should continue unless we get any news to the contrary from the Swiss or from the pound. Pound yen we've covered. Short. Pound New Zealand sideways, very much the same as the pound odd. Yeah, that's all sideways. Pound New Zealand is pretty sideways at the moment. No entries on this one. There was a kind of little short, just about a short entry there. I didn't get onto it, but you'd have had a second entry, an exit there. It's just not really moved enough to give any signals at the moment. Almost one there as well on Thursday last week. But yeah, not really doing an awful lot. Again, New Zealand dollar interest rate not changing. We had that short there, had a long there of the RSI extensions. Nothing much else on that one at the minute. So no bias either way. We are retesting this area at the moment, which seems to be holding very nicely. So we are sitting there, but if that breaks, we've got a drop ahead of us, possibly all the way down into that propulsion gap. but that is going to need the New Zealand dollar to rally for some reason, and there is no reason at the moment. So either they're just going to undo this weakness in the New Zealand dollar and just start, unwinding the long position or the short position, or we're going to need a news catalyst to start that move off. But it's been fairly orderly, this one. Yeah. So we've had 50% retracements in market structure, totally normal. So that's a 38 retracement there. So yeah, fairly orderly on the way up, but nice big propulsion gap targets to the downside, and especially this one. But it's going to take some news to get back down there. So that, I suspect, is a good target. So that reversal alert that we've just had, if you've taken that short, that would be where I'd be looking to get out. But not much else on that one. Pound US dollar. So obviously we had the big drop yesterday on the US dollar news. We got the gap fill. I suspect that will do that today, if not tomorrow. Once we've done that, obviously we then be into ADP non-farm employment on Wednesday. So that will all obviously shift on Wednesday when we get the PMI figures and the non-farm employment change figures. So at the minute with this one, I'd be looking literally only to long it. So 5-minute reversal that's gone in this morning. But I mean, you can't really trust these reversal alerts. It's designed to show market structure shifts. This is just a range. Yeah. And it's the last push out of that range. So it's not really a market structure move, is it? It's just a continuation from yesterday's news event, 24 hours of absolutely nothing. But it is starting to push up. That's your news event. So that is where I would look to target as a long. That's really all you can do with that one at the moment. US dollar obviously has been strong. There's been no real reason to buy the pound specifically over the last week or so. So this has just been run over by the US dollar. Lovely big propulsion moves on their way down there to aim for. We have retested it there, which is that low, which is why I got out of that long, because it hit that low. But yeah, that's where I'll be looking for it to head. But we've got support coming up here, which is kind of where we are now, isn't it? Yeah, so this is the support area here, which we are bouncing out of now. So pushing up into there and then potentially dropping down if we get positive US news. Negative US news will be coming up into propulsion. We'll have to wait and see what happens with the news this week. New Zealand dollar CAD. Got longs on at the moment. I've got an aggressive drawdown control position running on this one from last week. Yeah, just looking for a profit take move on that leg. So we're just waiting for them to unwind some of this New Zealand dollar move at some point. But I suspect we're going to need some news to drive it. So what would be good this week is some negative news for the US dollar and negative news for the Canadian dollar, obviously, just to get that move started. But at the minute, just grinding hard against that and no real profit take move or anything happening on it at all. New Zealand Swiss, sideways. So weak currency against a weak currency equals a range. Going anywhere. Yeah, New Zealand dollar's been very weak over the last 2 weeks. Swiss franc reduced their interest rates unexpectedly. Neither of them have got an advantage. They're just going sideways. So again, range bound on this one. I'd be much more interested in doing that though than that. Didn't quite get an entry there. But any ADR hits to the downside. There was an ADR entry there on, where are we? Monday, Friday, Thursday. So there was an ADR entry on Thursday, which you will be getting out of now. Apart from that, not a lot else. And New Zealand dollar, US dollar. Again, same thing. New Zealand dollar CAD, New Zealand dollar US dollar. They're going to do very much the same thing because the US dollar and the CAD move together. And this is obviously against the New Zealand. So same thing. Be much more interested in longs on it, but we need some negative news on the US. US dollar CAD, sideways. Loads of trades on this. You can see I've been milking this thing for months. Very, very nice and easily. Just beautiful movement. Up, down. All propulsion gaps filled. Look, it's just moving from propulsion to propulsion. We've got that propulsion move up at this high. So, yeah, push down into there. No entry on it at the moment, unfortunately, but yeah, just range bound. So US and the CAD will do the same thing. we're waiting for the interest rates for the US to drop. When that happens, the CAD will drop. If they both drop together, they will do that because there's no advantage either way. However, this Canadian dollar, if you look at the interest rates on it, we're sitting up at 5 at the moment. We're at 2.8 inflation, dropping at 0.1. We're at 3.2 inflation, going up at 0.1. So they're very, very, very similar from an inflation perspective. They're very, very similar from an interest rate perspective. I suspect as soon as they press the button, the same month they will press the button as well. So this thing is kind of going to remain, I think, doing this sort of price action for half the year. I don't know, all year maybe. It's just there's not really going to be. There'll be a period where the interest rates drop on the US, and we're waiting for that Canadian interest rate announcement, which will come out a week or so later, maybe. That will be a period where you'll have an advantage on one of them or the other. Then they'll fall back in sync again. So just range bound. Sell the highs, buy the lows, or thereabouts. If you get in there and that doesn't hold, that one probably will. That one probably will. Yeah. So the range is either going to contract or expand depending on the volatility between these two, depending on the news. But either way, there's no reason to do that or that long term. There's no reason for it to trend at the moment. US dollar Swiss pushing up. Again, this is a bit of a grindy one. Not the broker this morning. Bit of a grindy one. I've got one drawdown control attempt on this one that failed this morning. Not really aggressive. It was slightly aggressive, slightly a bit more aggressive than normal type of position. I was hoping we were going to double top on it. We didn't. So I've just got out of that this morning. But average isn't too far away, 175 ADR. We're just not really getting anywhere with this Swiss, obviously, because now the bias is like that. So this week really need some US dollar weakness. If that doesn't happen, same as the Aussie New Zealand dollar, I'm going to start scaling out of some of this. Anything below the line on the average, I will start to get rid of some of these positions. I've got 3 close together here. Reason for this is I'm managing this one manually as well. So the Aussie dollar, New Zealand dollar, and the US dollar Swiss are the only 2 trades I've got left running, which were run by the Market Reversal Alert CA, which I've turned off now. So I'm kind of manually managing this, and what I'm doing is I'm kind of scaling into an aggressive drawdown control position, but not by getting into one trade. I'm getting in fairly close together with slightly higher lot sizing to build one aggressive drawdown control position over multiple trades. But as you can see, if they're not going to work, I'm going to scale out of these as well, so that there's proper spacing between the trades. So at the moment, the ADR on this is sitting at 57. So half an ADR on this is about 30 odd. So that's 46 pips between those two. That's fine. Between those two is 42 pips. That's fine. So I've got just got one extra on here, which is this one here, as you can see. And that is one that got taken off this morning. So I will just start to scale out of this as it continues to go and take losses on it. I can't see, without news, any reason why this would come down. If we get positive news on the US, it's only going that way. There is no reason for the Swiss franc to power up and drive this back down again. So it's one of those, unfortunately, that since I've been into it, the fundamentals have shifted here. So I got into it back in January again, I think February. I think it was probably January. No, it's Feb. Yeah, beginning of February. So got into it beginning of February there. Looking for a push back down into that. We just got a grind. Bad news. Didn't get a pullback. Sat there for 3 weeks. Going nowhere. Then the market decided they may change the interest rates on the Swissy, so we'll weaken against it. Then the Swiss changed the interest rates. So since I got into this here, the fundamentals on this pair have completely shifted bullish. So this is a good example of you just have to get out and cut it. There's nothing you can do. If you get into a position and within the time you got into that position, the fundamentals shift the opposite direction, it's going to be hard to get out of. The only thing that I have got going for me this week is unemployment rates for the US dollar and the PMIs. So if we get negative news twice on the US this week, there's a good chance there's going to be enough to get us back down into this propulsion gap, which, as you can see, gets me out. I just need an ADR, 2 ADR push. But there's no reason for them to take profit on this in any real deep respect. They don't need to, because the fundamentals are that way. So they should be doing nothing but buy the US dollar Swiss. Unless the US comes and has a rally of bad news against it, which is fine. Or, as I say, we get something kicking off in the Middle East, in which case they will buy the Swiss. So it's one of those at the moment. I'm getting in aggressive in the hope that the US dollar powers up this week. Weakens this week on negative news. If it doesn't, I'm going to have to scrap it and take a loss, which is going to be a pain in the backside after what's happened in the last quarter. So it's not turning out to be a good year so far. But anyway, so we'll see what happens with that one. But the news events this week are PMIs. PMIs for yesterday, which again, positive. Look, see, we got jolts. Unlikely that's going to do an awful lot. So the next real impacted news is non-farm employment. But what will probably happen with that is we'll get a spiky whipsaw-y thing while we're waiting for the PMI figures. The PMI is more important than that. So if that PMI comes out as a positive, we'll probably get another move to the upside on it. So I'm kind of just waiting a couple of days. If we start getting ADR hit after ADR hit, I'll dump it. Nothing you can do. Just got to get out with the, unfortunately, and take a loss. But I'm very heavily positioned above the line on this. So all these below the line trades are quite a way away. So dumping one of those will bring that average up very, very quickly. So yes, it will hurt. It will be a loss. It'll be about $1,000, $1,500 per entry as a loss. But the average will get up very fast, which means I won't need much to get out. But as I said, there's not really any reason to do that at the moment. It's bad for the Swiss. They screwed us. But done it before, they'll do it again. US Swissy is a pain. It is a pain. Yeah, but it's one of those trades which is really easy to get out of. We were talking this morning about the 3-day push, the 4-day push. Yeah. 1 day is all you need most of the time. Huge drop. Bang, 2 days, undone, 75% of it. Look at the US dollar Swiss. There's a good example of the 4-day push not working at all. 4-day push, short it. No. It just doesn't work, does it? Yeah, the theory is sound. You can backtest it and you can curve fit it to make it look sound, but it's like anything. Every single strategy on the planet will work sometimes and fail sometimes. So, it's one of those things where you just got to take it on the chin, unfortunately. But with the multi-day push, we are pushing out these highs. So there's one of two things happens when you break a high. It's either a breakout or it's a false breakout. If it's a false breakout, we need one ADR day. Yeah, so let's say today is a false breakout. Then we get an ADR hit tomorrow. I'm out. All I need, an ADR hit. But the fundamentals say there's not really any point to put an ADR move into the downside, is there? Why would we want to do that? We're buying this at the moment. Yeah, so difficult. It's a very difficult one, the Swiss, at the minute. I took a hit on the Euro Swiss last month. Probably have to take a hit on the US dollar Swiss this month, unless we get that news event. Yeah, it will undo. Yeah, it will undo. Yeah, always does. But this is the problem with position trading: is you've got to hold it through that, and that is the next resistance, which is 175 ADR away. I can't hold it all the way up to there and just cross my fingers, close my eyes, and hope that isn't going to work. Yeah, you've got to scale out. So we'll see what happens today. But yeah, Swiss franc is pain in many backsides at the minute. That's a Larry Williams strategy, yeah. Yeah, we were talking about it. AZ brought it up. Transparent Trader did a video on it. And I've backtested it. It doesn't work. So, you know, this is the thing with trading. This is the thing that annoys me about trading. You're never going to be right. I will never be right. Because every time I'm right, I can say I'm right. And every time I'm wrong, you'll say you're right. No one is ever right. There is only people that get it right sometimes and people get it wrong sometimes. No one ever gets it right all the time. Larry Williams' strategy works really well if you backtest it on a specific instrument over a specific period of time. You take that and put it on another instrument over another period of time, it fails spectacularly. A strategy cannot work on a single instrument. A trading strategy is a set of conditions that are met to generate alpha. Yeah, they have to work on everything. Yeah, if you've got a strategy that only works on one pair over a period of time, when that pair's dynamics change, the ADR shifts, the volatility shifts, you shift from bull calm to bear volatile or whatever you shift from what market regime you're in, that strategy will fail. So yes, when something is pushed for 4 days in a row, Larry identified that there was a high probability of the market shifting back the other way. I can show you many instances, Larry, where you were totally wrong and it hurt. But yes, you were right eventually. Everybody's going to be right eventually, aren't they? Yeah. But it's exactly the same as the RSI. You know, and this is why I kind of demonstrated this morning. If you find a four bar push, just trying to find one a bit closer. Pick another instrument. There. So if you pick a 4 bar push or a 4-day push, that one, for example, and switch down, yeah, it's an RSI extension. Yeah. All Larry Williams' strategy was this thing's been going strong for a long time, isn't it? The chances are they're probably going to take profit on a percentage of that move before they decide on the next direction. Yeah. The relative strength index tells me the same thing. You'll find also the stochastic, the MACD, and the CCI will be telling you the same thing. So it's just another condition indicator. Systems and strategies have two moving parts predominantly. You have a condition indicator, which tells you the condition of the market, and you have a signal indicator, which tells you that your strategy's requirement either to go long or short is met. Yeah. In my instance, that is my condition indicator. The market reverse alerts indicator is my signal indicator. In Larry's case, in that one of Larry's strategies, his condition indicator was 4 days in the same direction. His signal indicator was on the close of that candle, if it's bull, I will get in. His exit indicator was, I like the look of that, I'm taking it. There was no exit. You can add as many exit conditions as you like. First profitable close candle, 1 ADR, 50% retracement, close back above a moving average, parabolic SAR, Bollinger Band. You know, there's 1,000 ways to get in and 1,000 ways to get out. But the fact of the matter is, every single one of them is discretionary. Yeah. Every mechanical exit or entry criteria you put into place will work a percentage of the time and fail a percentage of the time. If you backtest something and it works 75% of the time, that is never going to happen in the future, because what's happened in the past never gets repeated. There's no 2 days in the market that are ever the same, ever. There hasn't been. There never will be, because there is no 2 ticks. There's no day where the ticks are aligned exactly the same. Yeah, there's not 2 days that are the same on this chart. There are conditions which are similar where we didn't really do an awful lot, but that day is not that day, and it's not that day, and none of those days you will ever find appearing in the next 10 years. So everything you do in the backtester, those 4 days that pushed, it's never going to happen again. You will have another 4 days that push in the same direction, but they will not be the same size candlesticks. Yeah, they will not be at the same time before a fundamental news event, and they will not be approaching an area where they sold the crap out of because of a fundamental event. Yeah, none of these conditions are ever going to meet the same again. So everything that's done in the backtester doesn't work, which is why I disproved the strategy that he put up by building an EA to test it simply on a different instrument. It doesn't work. It only works on that instrument over that period of time. Take it somewhere else, fails. Same as the RSI. It works most of the time. Sometimes it doesn't. Flip a coin. Sometimes it'd be head, sometimes it'd be tail. Yeah, so there's all sorts of ways of getting in. It's something that I've looked at in the past, and that's why I built the EA, because I was interested in using it as a position trading entry criteria, but I never tested it. So I might do some testing on it to see if there is any legs in it. But like I said, I can eyeball on the chart and I can see that it doesn't work. This is the CAD Swiss. Yeah. 4 bull days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We've got 12 bull days in a row there. 12. He said get in at 4. So what do? Wait for the next 4 before we take a second? Or do we go with an ADR or half an ADR? Yeah, I can back test and I can find out what in the past would have been the best thing to do, but that's never going to happen again. It's just impossible, isn't it? Every strategy has a failure rate, regardless. All the 200 MA cross people that went, hey, look, there's a rejection of the 200 moving average. Everybody short it. You're dead. Oh, hang on a minute. We should have used the 250 MA. All right, let's start using that one. Oh, it never hits the 250 again. Let's switch back to the 200. Oh, it's failed again. Oh, it didn't quite hit the 200. Oh, if it had only got there, I'd have got short. If. All it's doing is telling you what's happened in the past. Pound Swiss ADR. There we go. So Swiss franc still getting hammered. But I'm going to do some testing on it, on that multi-day push, mainly just to see what the similarities are with the RSI, because there is and as with everything in trading, there is always a fault with everything. The fault with the RSI is when you get the extension, and then after the extension, it resets itself back to 50%. Yeah, so we got in there on the RSI extension. 2 days later, RSI was back at 50. So there is absolutely no advantage or disadvantage at all there. However, we are still in a trade. That's the fault of the RSI. If the RSI gets reset, it's useless. With a 4-day push type entry, you won't have that problem because there's no indicator. The indicator is the candles, isn't it? So. But it's another option for an entry. And I think the advantage of it, and which is why I kind of like it, is, and why Larry obviously used it, is it is indicative of bank movement. So anybody that's using any kind of system or strategy or indicator that is indicative of exhaustion has got an edge, because that's what the banks do. They drive hard in one direction, and to make money, they have to get out of that move, profit take it. Which is why I like the RSI. But you could use the CCI, you could use anything. But you could use multiple days in one direction. The problem with it is if you get 3 days like that, and then one tiny little down day, followed by 3 days like that, and then one tiny little down day, followed by 3 up days again, what you've actually had is 12 days of solid movement, except you would never trigger an entry on the trade, would you? So what do you do then? Switch to a 3-day push? But then what happens when it hits 4? You go, oh, I should have used 4. You'll just adjust it all the time. Hit the button, get in, deal with it after. That's all you can do. No advantage, no disadvantage, just different. That's what everything is. Morning ago, sir. Do you still trade the average weekly ranges? Yeah. Well, I don't trade them. They are there. It's a good entry. Exactly the same as I've just been explaining. When you get one of these lit up, what does it mean? Well, you also have an RSI extension. What could you also have when that lines up? 4 days solid moving in one direction, because it's got to its weekly range before a week. Therefore, it has to achieve it within 5 days because it resets every week. So therefore, if you get 4 days pushing hard in one direction, there's a good chance you'll hit your weekly range as the RSI gets extended. They all tell you the same thing. Whether you use that as your condition indicator, that is your condition indicator, or that is your condition indicator, what's it telling you? The condition is stretched. Which is better? Sometimes it's that, sometimes it's that, sometimes it's that. Pick one. Pick them all. Doesn't matter, does it? They're all going to work. They're all going to fail. It's just the way it is. There isn't one that works better than the other. There is always one that works better than the other on every trade. This 5-day push was what you should have used, not the 4-day push. The RSI didn't help you. The 4-day push would have given you an entry. The weekly range on the pound Swiss is 135. That only did 75. So weekly range wouldn't have helped you. RSI wouldn't have helped you. This is a 4-hour chart, but let's say this was a 4-day push. You can use a 4-candle push, yeah? I mean, this is the other thing. Larry Williams' strategy, he was an investor, not a trader. Yeah, he's the same as Warren Buffett. He was an investment banker, investment trader. So he was working on daily timeframes. Yeah, that's what the banks and institutions use. They use daily movement, which is why we use average daily ranges. You drop that 4-bar push theory down onto a 4-hour time frame, sometimes that will work. Sometimes it won't. But trying to find and see if there is one. And there isn't really one on that chart. There's 5 days, look. From there to there, that's 5 daily candlesticks. No signal there. But you would have had a signal to go short there. That wouldn't have hurt. And the range there was 113 on the Euro Swiss. Its weekly range is 103. So you'd have had a weekly range short signal. You wouldn't have had an RSI signal, and you'd have a 4-day push signal. Yeah. See what I mean? There is just different. There is not better, not worse. You can also use weeklies, you know. But weeklies, when you get something trending hard from a fundamental perspective, yeah, you're going to get a lot of green candles or a lot of red candles in a row. Daily is kind of like the sweet spot. It's all discretionary, yeah. I can't remember if it was Bill or Larry Williams, but one of them used 3 MA envelope. Yeah. There's loads of, I was saying earlier, Brian, you probably weren't here. All of the Transparent Traders videos that he's put out there are all based on people like Larry Williams' strategies. I have built them all and tested them all. They all fail. They are all strategies that are good and have an edge on a daily time frame on many instruments, but also they fail on a lot of instruments. But they're all stop loss based strategies. If you take away the stop loss and turn them into position trading strategies, they're fantastic reasons to get into the market because they're all mean reversion extension based strategies. They're all of their work is based on exhaustion, the same as mine. It's all based on exhaustion, which is great. That 4-bar push probably gives more exits on the 4-hour than the daily. More exits. You could use it as an exit strategy, definitely. But the thing, because I mean, what you'll find is if you get, like here, for example, you got 4 candles there in a row. You got 5 actually in a row there. Measure it. You'll virtually always find it's over an ADR. So why not just use ADR? If you get in long and it hits ADR, get out. Because the chances are it's exhausted. If it's pushed for 24 hours solid in one direction, no, sorry, 16 hours, I can't count. 16 hours solid in one direction, get out because it's probably exhausted. Yeah, it's all based on range and movement. It's all price and movement study. which is what you will find all successful strategies work on. They don't work on indicators. They work on time and movement. Yeah, distance, measured moves. Yeah, Elliott wave, all based on measured move. Fibonacci, all based on measured move. Speed, power, distance. Something goes really hard, it will come back really hard. If something doesn't go hard, it won't go hard. If something pushes weakly, it will retrace weakly. If something pushes hard, it will retrace hard. Yeah, this is why mean reversion is the most effective strategy majority of the time, because to do that, it takes an unbelievable amount of money and organization for a bank or institution or multiple banks and institutions to move the market out of something like that to a level. Once it's done that, it's exhausted and you get that pullback. You could measure it with an instrument like the RSI. You could measure it with an instrument like the ADR, or you could measure it simply by seeing that there's a load of candlesticks in one direction. They all tell you the same thing. It's stretched. Elastic band theory. It's all the same stuff. How you measure it, up to you. Weekly, you just use this column on the ADR dash. Same thing. Gives you the same thing. Except you don't have to monitor it. You don't have to come in every 4 hours and go, 1, I'll come back in 4 hours. 2, I'll come back in 4 hours. 3, I'll come back in 4 hours. Oh, start again. 1. Bit long-winded, isn't it? This is much easier. If this doesn't light up, that hasn't happened. It's really easy, isn't it? That hasn't happened. Why is the CAD Swiss and the pound Swiss both lit up today? Because the Swiss franc is falling through the floor. Yeah. If it's extended, what's it going to do next? That. Then what's it going to do? I don't know. But if it's done that, it's likely to do that. Just telling you the market's stretching. There you go. Aussie Swiss, same thing. Yeah. This is all because the Swiss franc is being stomped on. My Aussie New Zealand is nearly 10% drawdown. Yeah. I'm getting out of this, as you can see today. If we hit ADR, I'm out. That's my line in the sand. We covered this one this morning. It's since this New Zealand dollar, or rather not changing in interest rates, it's just not looked back, is it? The New Zealand dollar is just getting trampled. And the Aussies had good news. It's not had bad, well, no, it hasn't had good news. It hasn't had bad news. So, perfect storm. And again, I've had this with the Aussie New Zealand. The biggest squeeze I got into was the Aussie New Zealand before the Swiss franc, but the Aussie New Zealand back here. Yeah, this one. I was in long here. It does this. But that was a fundamental shift where we had the interest rates change on the Australian dollar. They dropped them before the New Zealanders did. Therefore, there was a massive fundamental shift. This is not a fundamental shift. This is the New Zealanders saying that they're going to keep interest rates the same, doing interest rates the same. The market, for some reason, going, don't like you. This is almost like racist against the New Zealanders. It's like, there's absolutely no reason for you to be doing this to the New Zealand dollar. But they are. But look at where we are, which is why I'm holding it and why my stop losses are kind of where they are, because of that. Yeah. Look at that massive push. Look what happened. Look at that massive push. Look what happened. Look at that push. What happened? That wasn't really a push. But look at this push. It's going to pull back. They will take profit on the move. My problem is it's too far away. I need them to undo 50% of that move, and that's going to take probably 2, 3, 4 weeks. By then, the US dollar interest rates will start to be speculatively sold, and I don't know what impact that's going to have on the Aussie New Zealand. So very, very tough at the minute. There's a lot of stuff really squeezy with absolutely no market structure. You can't do much with. This is the problem, and it's not just position trading as a strategy. It's all strategies as strategies all strategies have a weak point. Every single one. Doesn't matter whether you use a stop loss, you don't use a stop loss, whether you hedge, whether you don't hedge. It doesn't matter what you do, there is a weak point to the strategy. And that is either a case of if you're using a stop loss, being stopped out 15 to 20 times in a row because the market conditions do not meet the strategy criteria. If you're using position trading, getting stuck in a squeeze that just doesn't seem to end. If you're hedging, getting into a hedge, exiting portion of the hedge at exactly the wrong time when the hedge just expands and just ends up costing you an absolute fortune. There's always a problem with every strategy. And at the moment, because we're all driven around interest rates, everybody's job is guess the interest rate change. And the Swiss pulled the rug from underneath everybody. The markets pulled the rug from underneath the New Zealand dollar for no apparent reason. And we've obviously got the Japanese yen at the moment. So the other thing that can happen this week as well, which can affect that, it seems to be happening this morning, look. The other thing that's going to affect the Canadian dollar from the New Zealand dollar CAD perspective, which I've got this aggressive drawdown control position on, is the Japanese yen. So if that yen intervention comes, or the market decides that they are going to power up the yen, the US dollar yen will drop. The US dollar yen drop will be seen as US dollar weakness, which will weaken the Canadian dollar, which will help as well. So there's just a lot of stuff going on at the market at the moment. And there's just so many factors impacting stuff. It's just impossible to read anything. But those are the breaks, as Boris Johnson would say. The problem is that they're not going to pull back until you had enough and you close your positions. Yeah, that's the problem. That's called loss. What trading is. As soon as you close it, it will drop like an elevator shaft. Yeah. It will. You look at every squeeze I've ever been in, virtually every squeeze I've ever been in. When I pull the plug on it, it moves. But this is why they call it a squeeze. Yeah, you're being squeezed to a point of, I can't take this anymore. Usually that's the point where everybody goes, nah, not interested, because there is a level in the market that you identify and you go, no, if it goes above there, I'm out. If you're doing that, so is everybody else. And I'm not just talking you, me, the retail traders. I'm talking the banks and institutions that are underwater. They will cut losses as well in the same way. They will have levels that they will not want the market to move beyond. They will say, the guys on our side here, if they cave in, we don't want to be in this anymore. That is usually the exhaustion point. But what you're going to do, hold on, cross your fingers? You can't do that. You've got to get out. You've got to have a point where you just say, no, I'm done with you. But it's exactly the same as, anybody that is using any kind of strategy that uses a stop, they are, by the sheer nature of using a stop, they are trying to pick the top and the bottom of a market. When you failed to pick the top and the bottom so many times, yeah, and you've been stopped out 6 times on it and you've lost 6% of your account, how is that different to taking a 6% loss on a position trade? There isn't. Yeah. So if you're getting it wrong 6 times using 1% risk on your account, trying to pick the top, if we are getting in short and going into drawdown by 6% and going, screw this, I'm out, it's the same thing. We're just taking a loss in the same way as everyone else. The difference is this only happens 10% of the time, 90% of the time, the market just goes up and comes down, goes up and comes down, and we get out. So these losses are just losses. You just don't usually get many of them. It's usually 1 or 2 a month, isn't it? A year, rather. 1 or 2 a month, that'd be hideous. Is it just me, or do you also sometimes physically feel the squeeze in your stomach? Yes. Not very often now. I'm used to it. Yeah. I had sleep. When I first started doing this, I had sleepless nights. I used to wake up in the middle of the night and open the charts. Mainly when I was in Aussie and New Zealand pairs that were a little bit squeezy. I'd wake up in the middle of the night and go, I wonder what the New Zealand dollar's done. And as soon as you do that, you're stuffed because you won't get back to sleep. You'll be going, oh, it's come down. And you'll be thinking about it. And then you'll get up in the morning and that 4-hour candle that was bearish will have gone up again. And you'll be like, oh. Eventually you just go, nah, screw it. You have to realize you can just shut the position anytime and just go. It's like a pressure switch. You just go. Euro Swiss was like, oh, thank God, I'm out. I don't care what the Euro Swiss is doing now. I'm out. Yeah. Look where I got out on the Euro Swiss. Actually, it wasn't there. It was there. So that's where I exited the Euro Swiss positions. Actually, it wasn't. It was there. That's why I exited the Euro Swiss positions. What's it done since I exited? Bugger all. Yeah, that's where I exited. That's where we are. Over the last 2 weeks, when I got out of that position, it's done nothing. Yes, it's pushed up a bit further, pulled back a bit further, pushed up a bit further, pulled back a bit further. But realistically, it hasn't moved anywhere. Just what it does. Afternoon, Astro. Morning, even. Or your wallet. Wait, that's my girlfriend. Yeah. Push pressure on your wallet. Girlfriend. Try wife. I'm going to get shot now. Right. That's all I've got for you today. This week, I'm potentially going to get the MT5 version of the Position Trader EA out. So I want to try and get that nailed because a load of people are asking for it. And no matter how many times I say, why don't you just use MT4? They want it for MT5. So I've got to find out what the bugs are with closing positions in MT5. I've got an idea what that probably is. And if not, I've got another way that MT5 can close positions, which is probably easier to do and implement. So I'm going to try and get that done this week. So this week's live rooms, I've scheduled 4, just one a day, because we are fairly light on news. So obviously we weren't here yesterday. This is today. Tomorrow afternoon, I'm going to do the PMI figures. So I'll be on at 2:45. Thursday, I'll be on at 1:15 in the afternoon, and Friday 1:15. So they're all afternoon sessions this week, apart from today. That gives me basically every single morning just to focus on the coding side of things, and so I can hopefully get that done. So we have got other news sprinkled around. Let's just see if we've had any of the the German figures yet. Saxony. Okay, so Saxony's declared 2.5. Oh, year on year. I was going to say. Okay, so it's down. So CPI has dropped in Saxony. It's gone up month on month. That doesn't help. North Rhine, month on month, 0.3 on a 0.6. So that's come down. Bavaria is 0.4 on a 0.5. That's come down. Okay, so it looks like CPI in Germany is dropping, which will be negative euro. So we'll have to see what those what the market makes of it. So yeah, it is negative euro at the moment. We haven't got the final figure in, I don't think. That's not all of them. Is that refreshed? Yeah. Yeah, so it's not in yet, but it looks like that's probably going to come out as maybe a 0.4 average, which will be slightly negative, but that is only Germany. The Eurozone CPI is made up of Germany and France predominantly, and then the other countries. So this is only 50% of the two that make up the majority. So it's not the be-all and end-all, but it is certainly a little bit negative. So yeah, there's other news sprinkled this week, but those are the ones I'm going to focus on this week and watch what happens, because these are the ones I think are going to be the most impactful. Those two US, it's all US this week. The whole thing is US this week. It's all about US figures. So we've got JOLTS this afternoon. We've got PMIs tomorrow. And then we've got unemployment claims on Thursday. And then we've got unemployment rate on Friday. So all about the US dollar. And I want all of those to come out as red numbers. Please, Mr. US. That would be lovely. Yeah, so there we go. I had one of them, got rid of her. Oh dear. Or oh good. Depends which way you look at it, doesn't it? Could go either way. It goes, sir. Please and thank you. Yeah, no problem. So yeah, I'll be back tomorrow afternoon. I will be in Telegram and Discord. I'll be watching these figures just to wait until we get that final red number from the euro. But I suspect we might get a little bit of downward movement on the euro today. We'll see what happens. But the main story so far today is the Swiss franc still pumping. So, or dropping rather. So everything pumping against the Swissy. So we'll wait and see what happens. Yen, so far, no movement today. Not that I'm expecting anything particularly, but again, that US dollar news, which is why it's so important this week, if that drives this up, that will mean the Japanese will potentially press that button. So again, I've said it for the last couple of weeks. This is a key level. It's still a key level because we haven't gone anywhere. We're still there. So we'll see. All right, so tomorrow back to 2:45 for the PMIs. Anything else you need, I'll be in Discord or Telegram. Other than that, have a good day, and I will speak to you next time. Have a good one.